This is London with MarketHedge. Going to make this a very, very brief TA update and trade, trade alert for Bitcoin. Now, Bitcoin is currently dropped down into this 104,300, which is what? Which is the specific 4-hourly low RSI. I'm going to be real quick on this update because I want you guys to trade to the extent that you're relying on me rather than looking at your charts. Make sure you are plugged in to your charts and make sure that you have your targets preset and you have your notifications and alerts. Looking at the additional confluent line here on the weekly, yes, we've got the lower standard deviation. It's a hit I've been waiting for a while. And yes, I hedged the specific 20 moving average, which means what? I stacked orders for this move. And I'll tell you, I'm also eyeing, if we look at the macro, please pay attention. I am looking for the low to the high. The 23.6 is right at that $100,000 marker. It would be a great pick up, and that is just your standard Fibonacci retracements drawing from the low of 15.5, call it 15.3 to 15.5, all the way up to your 125,000. That 100,000 is perfect potential. A lot of orders are stacked at that level, and just say if you're looking for an entry on Bitcoin, that 100K is probably something quite a few people are looking at. There below, we'd be looking at 83.7, call it 85,000, with 70,000 being that 50% pullback. So the extent to which we are able to get some downside action may be a little bit more favorable as well, to the extent that we are looking at, and we are, let's do this on another chart. I can do this on the daily. Let's take a look at the daily. One of the least favorable charts for Bitcoin, period. Okay, and what is that? We're going to pay attention to this. And what is this, guys? In terms of let's look at this on the lines. Please pay attention. And if you're a bull on Bitcoin, you know what I'm pointing out already. Like, here we go. It's the broadening top. I've been mentioning this the whole time, that they're just not favored by bulls. You know this. It's just not something that we look and say, hey, we want to trade a broadening top. No, thank you. It's just not in our repertoire. So to the extent it's not in any bullish strategy I know, right, that let's just go ahead and trade them. They're just very, very reluctant to power up and through. You can look at the NVIDIA chart and learn a few lessons in terms of Bitcoin versus NVIDIA, and what NVIDIA and Bitcoin also share in common. Now, to the extent that we are currently breaching this line on the daily, it would be a big breach. And to the extent that we're looking at a pickup at this level, it makes this critical 4-hourly low RSI all the more important, right? When we close out the day, are we going to be below or above this specific line of support? Now, this is a big on this pattern, guys. It's a breakout pattern for the bears. Now, in terms of the details, how big of a measurement to the downside is this? And I've laid off of this for the most part. This is an $18,000 amplitude, okay, amplitude pattern. What does that mean precisely? It means to the extent that the bulls, right, just completely surrender the territory in terms of six-figure Bitcoin, we're going to be looking at a potential for full completion on this pattern on the daily, over $18,000 additional dollars to the downside. So that's right at that level where we pointed to, guys, which was going to be about that 70,000. Let's look, what was this? That would be about the 50% retracement. That's a big retracement just immediately to consider. I think you guys will agree. But nonetheless, this move, if we could get that $18,000 out of it, I don't know anyone who doesn't want Bitcoin on discount. So to the extent that we could get down to the 87 full target, just know that we've registered that specific level as the target completion for this monstrous, bearish pattern. It's a bearish pattern. We have to look at it and give it credit that it is a nice pattern typically for the bears. With that said, we're going to continue to hammer in on the lower time frames. You'll see several accounts that are already doing well in the money. Let's remember a few maxims here, which is never overexposed at any higher price. That applies to you. Don't ever be overexposed at any higher price or any specific one trade. And what's the key? To always have heavy cash reserves, right? Always have heavy cash reserves. I see some traders that will get involved and they'll trade and they'll think they're doing great. They'll get wiped out. Then they are waiting to refill their account. And while they're waiting to refill their account, literally their strategy would have made potentially twice as much as they had just lost, right? So make sure those cash reserves are fluid. It's something that you can move into and out of the market as you please and as you need to. And don't count that necessarily against the market if you're over leveraged or you're overexposed at any specific time when the market could have given it back to you, but you were just kind of mismanaging your participation with it. I understand it's full throttle, guys, max acceleration in terms of looking for more risk and looking for more accompanying gains. But just make sure that you're, that's just my kind word for the day. Make sure that you're scheduled into this. It's extremely risky. You guys know that. And this is London with MarketHedge. Let's go ahead and see how this lower standard deviation weekly picks up. It's been a great, go ahead and back test it again. It's been a great pickup generally, and I'll be hedging here and under, and I've got a lot of upside interest. So a little bit of luggage, to say the least, at this point. Not sweating. It's a great week last week. Looking forward to a great week again this week. Guys, it's London with MarketHedge. Take care. We'll talk to you soon. Bye-bye.